Nick, how are you thinking about pricing? That was another question that we brought up with Hugh Johnston. He was talking about the fact that obviously their prices have been rising over the last several quarters. They rose by about an average of 11% here in the most recent quarter. Do you see more price hikes on the horizon? Or I guess, how do you see PepsiCo balancing that with demand?
Yeah, I think it's going to get a little bit harder than what we've seen over the last 2 years, right? The reality is the macros are deteriorating. I think retailers are feeling some of that pressure. That will then become an upstream pressure to the manufacturers and the suppliers. And so I think taking incremental pricing is going to be much tougher, especially when you're seeing private label across a lot of categories start to gain some momentum. And so I think that is going to be a key debate and dialogue in 2024. I'm just not that optimistic that all the pricing that these companies want to take will actually make it into the marketplace. They'll probably have to promote a heavy degree of it back.
And what does that mean for some of the wholesale partners as well? Is their wholesale category to you strong or stable at this point, or is that where some of that kind of pricing mechanism is also going to be passed through as well?
Yeah, I think it's going to pressure the entire supply chain, right? The reality is if the retailers are focused on foot traffic, they're going to have to be very sharp on their price points, especially in these consumer staples categories, especially these heavy frequency categories like snacking and carbonated soft drinks. So the reality is they're going to want to keep sharp price points. That's going to put pressure on every step of the supply chain. And look, if we have further inflation because of energy costs going up because of this Middle East crisis conflict that's starting, that's going to be, I think, an incremental pressure point that these companies are going to have to deal with. And they won't be able to offset it with pricing. It's going to have to come through productivity.
And Nick, broadening out the conversation just a little bit, we're talking about the effects, obviously, some of the factors that companies, not only Pepsi, but many of their peers are factoring in right now when we talk about future demand. What are you expecting to hear from some of the other companies that you covered this quarter? Is it going to be a similar story to what we just heard from Pepsi?
Well, remember that Pepsi gained share in its biggest business, which is the U.S. salty snack franchise, right? Frito-Lay North America. So if they're gaining share, they kind of missed on volume. The pricing was a bit higher than what we were all modeling. I would suspect that not every company, packaged food company, is going to look as good as Pepsi this quarter, right? What we're hearing in the marketplace as we do our channel work and our field work is that there's definitely deterioration. Volumes are not coming back at the magnitude that many of these companies were expecting as we start lapping this pricing. Costs are still staying elevated. So I would expect quite a bit of cautious commentary coming out from many of the companies as we roll through the next few weeks in earnings.
Nick Modi, RBC Capital Markets Managing Director. Nick, great to talk all things PepsiCo with you here this morning. Appreciate it.
Thanks for having me.